Hey everybody, good afternoon and welcome to 12-Minute Trading. My name is Doc Severson. Today is Monday, the 21st of April. I'm joined by Dave Lukas. He's over here now, 12-Minute Trading. And wow, here we go again. This is like a couple of Mondays ago, whether it was, 2 or 3 weeks ago. It seems to
hmm
be like we get this news coming in over the weekend, the market freaks out, and we start out Monday with a thud. And then usually by Wednesday or Thursday, we're heading in the opposite direction. The problem that we're seeing, and Dave is going to amplify on this, but there's just no certainty that's out there at
hmm
all. Right now, Trump and Bissett are trying to desperately, as we've talked about for weeks, trying to get interest rates down. And everything they do is causing them to rise because people keep selling the bonds and the rates go up. So now he's going after Jerome Powell, trying to get Powell to drop the rates. And Powell, as we've talked about, and this I think the technique that he's using is going to make things worse because Powell's going to retreat back to his corner. He's going to send out his lieutenants all this week, and they're going to talk about, whoa, inflation, look out, tariffs and
hmm
inflation. So I think this is what the market's doing right now. There's no certainty. There's no safe harbor out there right now unless it's gold
But yeah, but
or Bitcoin.
Even Powell's actions don't help the case for what they want to do. Again, Powell doesn't control the long end of the curve, so he can cut rates to zero on the front end, but that doesn't mean the 10 year is going to make,
Right.
a difference. It's not going to budge. That's the real market. And what the market is telling everybody, what the bond market's telling everybody is that we don't have as much faith in the dollar as we used to. Now, the dollar is still used like in 50% of the transactions around the world. So, it doesn't mean the dollar's going away or anything. It just means that like that's why you see gold, doing what it's doing because a lot more are trading in maybe gold or holding gold as a reserve to use to trade against things. And you also see Bitcoin starting to decouple, at least for today. Bitcoin's got a nice move going up. And where it's traditionally gone with the markets down big, Bitcoin's up pretty decent, right? So maybe that's a little bit of a decoupling you're starting to see. But the biggest thing, as you said, is just like nobody knows where things are going to go. Like you've got Japan out there, right? And they've said it all day, and they're reporting like, the headlines are everywhere. They're asking the US, like, what do you want, right? And they can't get an answer for them. So it's like, what does the market have? What do they have to go on? It's when in doubt, palms out. Yes, get to cash and just sit tight until you've got something of certainty, right? And that's why we see these wild swings in a market like this, right? We can get a 10% move higher this week on one announcement, one trade deal, anything. We've said that we're one Truth Social post away from an 8 or 10% move. It's just that the way that we're in there until things really settle into something that is we can bank on it in the future. This is the market you're going to get, and it's going to be not fun. And then, like I said last week, if the market sniffs out a potential recession, you're going 10 to 15, maybe 20% lower from here. And so that's just the uh, the state of the state as of now.
So Dave, what might help people that are listening today? Because I mean,
hmm
we're just sensing uncertainty no matter where you go. But we've
Yeah.
sort of seen this picture before, I think, in the past
Yeah.
through this. So let's do this. Let's take this out like maybe 6 months to a year from now. What would you say where we are in terms of not only just trade deals, the economy, rates, and maybe even the market? Where do you think the end game for this is going to be a year from
Right.
today?
It's actually very tough because the longer this goes on, the more damage is done that lasts longer, if that makes sense, right? The more supply chains are screwed up for longer, the longer those effects last and have to, get fixed over time, right? So, it's really a function of the longer this goes, the worse it is longer term. So, if they have clear goals for what they want from trade, and they say what those clear goals are and get them, then that brings certainty to the markets. There's a couple things. Remember, the market is not the economy. The market is different than the economy, right? So, you can have an economy that's not doing well, and you have a market that's doing really well. We saw that really during COVID. Now that took the Fed and Powell and the money printer and everything else. The challenge that we're in again is the faith being lost in kind of the U.S. Dollar. In fact, I saw today the European Union's out there saying that the euro may be a good replacement for the dollar. They're out there stating that, right? So when you kind of see what's going on, you've got gold that's kind of reflecting, although gold is gone pretty parabolic. There's a pullback probably due in gold, but I still think gold is a long way to go if it wants to catch up to parity from over time, right? I saw somebody calling for gold at $30,000 an ounce by 2035 the other day. I don't know if that's going to happen, but the point is that the current monetary system is being tested at the biggest level it's been tested probably since 2008 at this point in a different way. So the way to answer your question, really is nobody knows, but the longer this goes, the worse it'll be. The sooner that the things get rectified, the easier it's going to be on everybody. But I think the market is going to probably, the market I think could easily go down to 4,000 on the S&P if recession comes in and, markets really, have uncertainty for a while. Or it could be back up to, right back up going to new highs if it's got true certainty and things are kind of set and everything. I think you'll be somewhere in the middle. I think we're going to be in a big range for a long time. This is going to be one of those years of just going nowhere for an entire year, I think. So very, very big range though.
Okay, I am going to answer my own question just from a charting perspective. So what I'm going to do is I'm going to look out. Here's the S&P, and we can actually go out to like a weekly chart here, which helps. Now, something to keep in mind from let's go back to daily just for a second. Something to keep in mind is the way that we frame using fibs. So we've taken the fib retracements from the bottom to the top here from what was that? Was that a Monday a couple weeks ago? It seems like we've been doing this for years now, but that was that Monday, I believe. And then we had the Wednesday explosion, which was, a week and a half ago or so. And then since then, here's the 61.8% retracement, which is just below 5,100. It's like 50.80 on the cash. If we close below that, what that means technically is it's very, very likely that we're going to at least undercut the former lows. Mm-hmm. So be prepared for this potential flush. And this would be almost unheard of that it happens that quickly. That's a really, really nasty move, which does imply that we're probably, now I'm going to go back out to the weekly chart here. That does probably imply, if we do this, that implies that more than likely any rebound rally from here will end up being a very tortured lower high and will set up as a lower high here on the monthly chart. And then we'll probably end up doing something like this, like, if you say, so here's the recession route for things. If we don't fix things early, then as you point out, we're going to have all these downstream effects, which will be seen through that monthly lower high. The monthly lower high, when it gets printed like that, usually says, clear all your risk right now, get yourself set up, and, get your parachute on because we're heading down. And it's also going to be when we're going to find out. I don't think we're going to find out like first quarter GDP until first week or two of May. And then we're going to see whether that comes in negative, and we're going to see whether that is trending negative as well for second quarter.
It's not going to, first quarter is not going to be negative. It's not going to show up till later. You had a lot of pull forward orders, a lot of pull forward for everything ahead of the tariff. So actually Q1 may be actually decent. It's Q2 and beyond where we're really going to start to see cracks.
But of course, the market's not going to wait for those numbers to come in.
Nope.
So on the other hand, if things get settled here fairly quickly, we may rebound very, very quickly from this point, consolidate, and this is going to be the delineation. If we consolidate very quickly in a very high and tight manner, that does
Mhm.
point towards something higher. So we're going to be looking at, we are due, and I've said this before, we are due for some kind of relief rally, maybe into the end of the month, maybe into the first couple weeks of May. It really depends on how deep we want to go against the 200 and things like that. The 200-day moving average is in green here. But as we get that relief rally, this is where we're going to be taking some very strategic decisions in terms of clearing risk and either setting ourselves up for long or maybe even short to the downside. So this is kind of where we're looking at just from a technical perspective over the next, I'd say, maybe 3 to 5 months.
Yep. And that's why, like, if you look at it as a whole, it's just a big, big, giant range that you're going to be sitting in, for quite some time. If, again, it just all depends on how things shake out. And I mean, that's really what you're seeing in the market. It's been a long time since I've seen a market that has really this much uncertainty in it. Like COVID even wasn't like this because COVID happened, you got the initial reaction, and then government acted and the Fed acted. So markets had that certainty that was like, okay, we got liquidity, we've got, stimulus, we've got all this stuff that, they could bank on and trade off of, right? Um, it's just been a while since I've seen to a point like this much certainty. And effectively what's happened, right or wrong, whether you agree with it or not, is kind of thrown a big bomb into the 70 plus year financial system and, you know, uh, uh, what's the word I'm looking for? Not just trade, but the whole distribution system of the way things are done around the world. And so that's why I keep saying the longer it goes on, the worse it gets, right? So all of that is getting kind of messed with, and nobody knows what the ramifications really are, and that's exactly what you're seeing in the markets. So it's a good time to just hang tight. Honestly, there's some of the best trades ever are just not to trade at all. Gold maintains a pretty good. Bring up the gold chart though. We can talk a little bit about the parabolicness of that chart. So I think there's a pullback probably coming in gold on the next good news, right? On the next market rally is when gold will pull back. And that's where you might want to step in again. So, because it's definitely it's gaps. I mean, the gaps in the GLD have just been ridiculous on a day-to-day basis for the last week. So
Yep.
yeah,
Here's the gold contract and the
yeah.
GLD. This is what Dave's talking about. So the
Yeah.
GLD is an
Yeah,
equity
that's
ETF.
parabolic. And you look at the GLD, it's just gap, 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 gap.
Yeah.
Look at that thing. I mean, look at that breakout. That's and the energies, if you look at them, are like on the floor. They're at like 12, on the daily energies. And the weekly. The weekly's down to like 15 or 20. So this is what you have. You just like, gold is definitely trading like it is not just it's part of the safe haven. And I do think that maybe some of what we're seeing is the money's not going to bonds and it's going into gold. I do think some of that's happening around the world. In fact, you can track countries' gold vaults and how much they're growing by and stuff. And China, a lot of these countries are definitely bringing in more gold. So I do see we got some questions. Brewhead, a lot of international markets closed. Yeah, it could be low liquidity. I don't know. What's that look like today overall? What's the volume look like, Doc?
I'm right now. What I'm doing is I'm working up a chart for Brewhead here. He has a
Yeah.
question about all the way in the back.
Thoughts on
Maybe
causing an international depression or recession, please? Well, again, the longer it goes, the worse that could be, right? So, what causes recessions? The thing to watch for, especially for the US for recession, is unemployment. Unemployment is nowhere near the levels where you
I think we.
in the
Oh,
low
there he is.
fours, 4.1%, 2%. So like we're nowhere close. That's why I'm saying like GDP is gonna, I think, be fine first quarter. It's what happens over the next couple quarters. We start seeing a lot more layoffs, things like that. You know, remember a lot of people took a buyout from the US government that goes through like September, October. So those people aren't hitting, the unemployment lines until that time either. So it may be a while before we actually start to see that. That's why I'm saying it's too early for that. But but the markets will sniff it out ahead of time. So midsummer, that sort of time is when, probably that August time frame, right? Where we usually get selling, if we get a rally at some point through the summer, which happens in a normal year, that time in August and stuff is when things will get sniffed out and stuff from there. So, what else?
Okay, I'm gonna bring up this chart. So
Yeah, Rob, my whole thing with this has been it's not that what the the ideas are or the fact that tariffs can work or not. It's my whole issue with it has been the messaging has just been absolutely terrible. To do something like this and really do something that will completely change kind of how financial markets work and stuff, you need to put out there a good, solid, this is how we're going to proceed over the next year plan, and this is what you can expect, and then follow it, right? Hey, we're doing this one day and this the next, and now we're 90-day pause. And like that's what just freaks everybody out and markets out because nobody knows how to trade yet tomorrow, right? What happens tomorrow? Nobody knows, right? So that's I think a huge mistake by the administration is just the messaging. Now, maybe that's on purpose. Maybe that's how they're using that kind of erraticness or that uncertainty or that sort of thing to roil, people up and countries up so they do make a deal faster or they make a deal that that we ultimately want. But when you got Japan going, hey, we're at the door, we're ready to do whatever you want. Like, talk to us, tell us what you want, and they won't tell them what they want. That's weird, right? It doesn't really make sense if that's your goal. Your goal then would be, okay, here's what we want, right? We want X, Y, and Z, and we want it done tomorrow. Agree or not agree, right? That's it. So just kind of weird. So all right, Doc, you said Brewhead, you got a chart for
just reading Rob's
him?
comments. Yeah, well, I mean, I agree with you, Rob. It's like when you insult somebody of Powell's stature,
Just
irrespective of
digs
what
him in even further.
it's yeah, he's gonna go into bunker mode. He's gonna go into
He
bunker
already hates
mentality,
Trump and knows Trump's going to fire him.
and he will
So
do
like,
anything in the world to do the exact opposite. I mean, it's like if you've had kids, if you've had children, if you've been married, and
mhm.
you've gone into one of those situations, like if you tell your kids like, well, I want you to do it because I said to do it, they're going to do the exact opposite, just for that same reason. And I see the same thing happening with Powell. There's no way. So he's going to use his lieutenants all this week to like lay out and obfuscate and throw smoke up in the air and everything, and it's going to be yeah, it's going to be a little bit of a cluster this week, I think.
And I can understand the disappointment with Powell. Like the decisions of the Fed over the last, 10 months don't make sense, right? You cut 50 basis points a month or a couple months before the election at a time where inflation was a lot higher than it is now. Now you hold while inflation's dropped, and energy's dropped 15, 20% and so on. But now you hold. Like, I get it. I get why he's unhappy with them and the politics of it on both sides. But the way that just attacking is not going to do it. And Besson's actually a really good go-between, but Besson's going to have no effect if Trump's out there just hurling insults at him. And so that's some of that's directed because Powell, basically, what he said last week, everybody said was an insult towards Trump and stuff. And so now he's taking it personally and he's lashing out. That's Trump. We know that. And guess what? It's not going to go anywhere. Now markets though are sitting there going, okay, now we've got that to deal with, right? So
I
that's
mean,
another reason the dollar is sinking and gold's going higher.
if I were Powell, I would say, go ahead, fire me. What are
Yeah,
you going to do? Fire me.
yeah, he can. By law, he can win his terms up and appoint somebody new, which he will do, but he can't just fire him in the middle of the term. So
Well, okay, real quick here. I'm going to do this for who was asking? Brewhead. Brewhead. All right. So first
hey,
of
Rob,
all,
that's the same thing my dad says to me. Isn't somebody, he's got all these smart people around him. Why isn't he saying, look, Trump does what he wants to do, regardless of the people around him? So, bad messaging, actually, from a guy who really knows how to message well, believe it or not. I mean, that's his
yeah,
whole career is built on that.
that is true. Okay, so Mr. Brewhead, what we're looking at here, this is the S&P 500. The most important thing that you have to do is you have to set up a log scale on these. So if you're going to play long term and look for trend line touches and stuff like that, you got to play log scale. You can't do linear scale because basically the problem has been all the money printing that's occurred over the last 15 years has completely distorted this. So if I take off log scale, it just looks like a parabolic chart. So we've had to do the same thing with Bitcoin as well too, because Bitcoin over the last 10 plus years has gone in the same pattern. So that's the good news. The bad news is it's not anywhere near the upper nor lower trend line. And so obviously the last really bad recession that we had was in '08, and we went well below the 200 month period here. The green line is the 200 month moving average. Last one before that was in '74. And then obviously, during World War II, we had our issues with, wasn't looking too good at the very beginning of it. So we could potentially go all the way down to somewhere around S&P 2000 and still stay within this. I mean, that is a potential. Now, the answer there is it would take years to do that. I mean, if you want an example of that, look at the recession that we had in 2000. It took 3 years to unwind that. And this is what Dave and I are saying is like we could be on the onset unless that gets fixed quickly. We're probably looking at something which is going to be a kind of a torturous, grind to the downside that's going to be filled with some huge rallies. And it's going to be eventually those rallies are going to give way to the trapdoor. So they need to get a handle on this thing pretty quickly because, like Dave says, everything works downstream. So unless they get this fixed fairly quickly, it's going to affect supply chains. There's going to be so much uncertainty. Everybody's just going to lock up and just say, forget it. I'm not going to do anything right now.
Yeah, and that's what I was looking for earlier. Is the whole supply chain is like throwing a bomb in the middle of it, right? As just from an entrepreneur standpoint, I read a lot of other entrepreneurs and connect with a lot of other entrepreneurs out there, running businesses and stuff. And I know some people that, to compete have had to move their manufacturing abroad, right? Just to compete price wise. Nobody will buy their products if they can't in the markets they're in if they can't compete, right? And so they're US based. They have a lot of employees here, but they source products or pieces of products from abroad. And when prices like double overnight, things like that happen. Like, what do you do if your margin's like 18% and your prices on stuff have to, double overnight, and that takes away the bulk of your margin? Like, there's like, what do? You got to either raise prices to the consumer, or you got to, try to negotiate down. You got to eat it, right? But like, somebody's losing in the end. Either the consumer's losing with higher prices, the business is losing, maybe it goes out of business and those people are fired, or they can't hire as much, or they have to let people go, and so on and so on, right? Which is why it's like you just can't turn it on a dime. Like you've taken 70 years to build it, you've got to do this in phases, right? And that's where I think they're what we're seeing. And the ramifications are yet to be seen of it. And the longer it goes, the worse those ramifications will be. And so that's just where we're at. So trading this, guys, the way that I've gone to trading, we talked a little bit about this last week, but I'm I like my short-term trading, I've gone away from doing any short-term trading. There's no point when you look at today. I mean, we're at the expected move for like the week, in the markets, right?
We
So
actually
it's
did.
like,
We hit the weekly expected move this afternoon.
yeah, for the entire week. So how do you,
Yeah.
how do you set up like, normally you can set up trades that are, 1.5 times outside the expected move, that sort of thing, and you're in great shape, right? That you can set up at 95% win rates are getting attacked today. So no point to even mess with that. So what I'm doing is I've gone back to just my old tried and true that I started with years ago when we only had one option cycle, right? It was every month, third Friday of the month. And, I would sell 4 to 6 months out on good quality companies or indexes and, sell, below or at or below the 52-week low, right? And I have very specific rules from that. Still have to be above the 200-day moving average, daily moving average. Need to, it can't be within 2 weeks of earnings. So like right now, a lot of the like stocks that I'm watching on my watch list can't do anything. We're inside 2 weeks of earnings. Now, some would say, well, why don't you sell during earnings, right? You're selling deep out of the money. If that stock pops, you could be in really great shape. Well, yes, but you could also get what happened to United Healthcare last week. And all of a sudden, it's, at a 52-week low where you would have sold, right? So it's not worth it. Earnings is a crapshoot, right? One guidance that's off. And so there are some, ones that I'm watching, Doc. If you want to bring them up, we can talk a little bit about it just to give people some insight into this. But most of these are, definitely within earnings. So like the first one, you and I know this, we've talked about is like GEV, GE Vernoma. And that's been kind of a spinoff from GE. It's done really well. It's got a nice uptrend that it's in and everything, but earnings are, I think, Wednesday, 23rd.
Yeah, they're
And
this.
so what we ultimately have there is you got to wait till after earnings, right? So, but you can sell on that thing down and, 120 points lower on that stock right now. And you will be able to after earnings too, out to like August or July even. And so you can see there it's 307, you're getting fills down in the low 200s, high 190s on it. And you can kind of see when you look at it there, it's down in that 180 to 200 range is pretty good level of like support on it and stuff. And so anytime I can sell down there is really good. Can't get it below the 52-week low. It's had a good run. Another one is like Root, ROOT. Now this stock has just gone crazy this year. It's an insurance company, and it's done really well. But it's got earnings coming up in the next 2 weeks, right? So this is one that you just have to wait. You can sell right now at like 60, so like halfway, 50% lower, right? All the big players have earnings. You got Tesla tomorrow. You've got, obviously Amazon, Apple, all those guys coming about. But I'm getting typically when I do these 10% return on risk. Now, one that I am looking at is Netflix because Netflix had earnings last week. Netflix, you can pull that chart up, looking pretty good. Netflix really isn't bothered by tariffs, right? No real tariff issue there. So if you pull up the chart on Netflix, you can kind of see where we've got it's moved from. And there's that move up today. Now it's not as good as it was after hours the other day, but it's still pretty good. So it's in really good shape. You can kind of see where it's at. You
It's
can go out
not
6
affected by
months.
tariffs.
What's that?
Not affected by tariffs.
Not affected by tariffs. So like that stock's I think going to continue to do pretty well, right? So so that's the idea, right? Is like you get out of the fray, you put yourself, a really good spot, way out of the money. Don't deal with it. Yes, it takes a little bit longer, right? Then you're not turning your money over like you are doing weekly or every 3 or 4 weeks, but you're not having to deal with getting a trade, getting attacked, and all that type of stuff that goes with it, right? So it moves a lot slower, but it requires the whole point of 12-minute trading was like you put the trade on, you don't have to do anything, right? And we've just added things in over the years, but this was what it was, right? Um, so so those are some thoughts for you guys to start thinking about. In fact, if you go to just keep Netflix up, go to the trade tab. Let's just see where we could sell out to August or so. Just take a look at the options chains on that one.
You want to go to August?
Yeah, let's look at August. Why not?
What kind of deltas you want to look at?
We're in 10 delta. Just take a look at the 10 delta, see where it's at. The expected move
730,
is about 200.
730.
Right?
So you can get down at 730, which is close to the swing test here.
Yeah, yeah.
Swing test is at 700.
Yeah, and you're also out of the you're outside the expected move. So so you could sell and make yourself about 10% return on risk, typically or a little bit more.
One of the things I want to bring up today, guys, since we're hitting our 3 o'clock here, is look for this signal. This is the advancers minus decliners. And right now we're sitting at negative 477. What that means is that out of the 500 S&P stocks, member stocks that are out there, right now 477 of them are declining versus Friday. So we're actually lower than they were on Friday. So that means that only 23 are either flat or positive versus Friday. When this hits single digits, advancers, so negative 490 or worse than that. I have used this over the past, I'd say about 15 years, and it doesn't show up very often. And it shows up even in bear markets, obviously, but it's been a dynamite signal for a retracement long. The thing that I will say though is you got to get rid of the inventory quickly. Don't hang on to it, right? So we had the same signal showing on the SPX the other day, down at the very bottom. In fact, in the trading room, we saw this signal down here and we entered long, and I think we were 6 cents off of the low for the SSO. We sold it into strength here. Half of the position, we sold it into strength. And that's kind of what you have to do. In a choppy market like this, you have to get ready. You have to get used to selling when it seems like the coast is clear. Right? So if you're going to play these things, and the strongest rallies that you will ever see will be during corrective or bear markets like what we're in right now. So use those. It's not easy spotting the top of these. They always look easy in retrospect. Oh, there's your lower high. You should have seen that. And, you never know, because these things are typically, you'll start off the day positive and then you'll end up negative. That is the signature of bear markets, that any early strength is sold into. So look for this saturation trade here. It may happen by the end of today's close. I don't know. But typically that's a really, really good long signal. It shows that the move to the downside has been pretty much run its course. It's unsustainable. So.
Good point. Good points all around. Yeah, we're at the end of the time. Good comments and everything today, guys. But yeah, we're just, we're along for the ride right now. And it just all comes down to what the next good announcement is, or whatever that is, to give this market a little bit of hope, right? And that's really what it is. But if there's something that is concrete, that is a path that's seeable into the future, this market will rip back higher again. And as Doc said, though, some of the strongest rallies come in bear markets, right? So 10% move up from here, not a surprise if that happens in the span of a few days, and then gives back some and so on. So just be prepared for that. And take a look at some of the longer term stuff. It works really well. You don't stay in that long, by the way. You actually in some ways can get out fairly early on those things. And it's definitely a lot easier on your mind and your just your day and all that stuff. You don't have to sit there looking at a computer for anything. So
all right, guys. Well, let's see what happens into the end of the week. It's sure to amuse, and we'll see what kind of close we get into today. We are seeing the advancers starting to perk up a little bit. I'm starting to see a little bit of positive divergence on the internals showing up.
Probably see a little bit of maybe a little bit of a rally into close. We'll find out.
Yeah, and that's, if anything, that's probably less about the longs jumping on board. And it's more about the shorts, like saying, okay, we made a nice gain today. Let's see what he says tomorrow.
Yep, exactly.
Awesome. All right, guys. Thanks, everybody. You guys have a good week. Let us know how we can help.